All right, today let's talk about insurance. Insurance is one of those necessary items in life that you really don't like to pay for. I mean, because actually you hope you never use it. I mean, if you have car insurance, you don't want to get into an accident, have the insurance company pay, but you're going to get insurance and you're going to pay the insurance, and you may pay $1,000 a year, $2,000 a year. It's going to depend on your age, type of vehicle, if you've had speeding tickets and whatnot. So we're going to get into insurance, and because everybody's going to have it. If you rent an apartment, you need renter's insurance. It's amazing. Not every renter has renter's insurance, but if you rented an apartment, for instance, not long ago over at JMU, some apartments caught on fire. People lost everything. If they didn't have renter's insurance, they're out of luck and they have to pay all the costs, whether it was a new computer, TV, or whatnot. And renter's insurance is cheap. So we're going to talk about that as we go through chapter 9, because you want to have insurance because it's going to protect you. It's like having an umbrella in the rain because you'll need it at some point. Um, you may have to use your homeowner's insurance. Could have a tree fall on your roof. I mean, you just never know. So anyway, so we're going to talk about insurance today because you need it. And you're going to have multiple parts of it. So we're going to talk about the types that you do need. Some insurance you just won't need to fool with. But what we're going to do with insurance is, because if you buy a car, and let's just assume that, there's a risk that you drive it home and somebody hits you. Okay, so you don't want to pay for it. So you transfer the risk to the insurance company. So you pay them whatever it is. You could do it monthly, come out of your bank account, however, and then you get the coverage that you need. And if somebody hits you on the way home, you're insured. And let's say the bill was $2,500 and you're paying $500 every 6 months. That's a pretty good deal. So it covers, and of course, most states now require you to have insurance. All right, so we're going to talk about that. Now, on page 188 in our workbook, while paying insurance premiums may feel like you're losing money because you hope never to use it. So, in a sense, you're just throwing it out the window. I mean, that's what it feels like, all right? In the end, it really helps you keep more of it because you don't want to be stuck with a huge bill. Now, we're not going to recommend you get insurance on everything, but we will talk about the things you do need insurance on. Now, it's important to remember that insurance, it's a financial product. So we talk about it in personal finance. And there's a lot of misinformation out there. And so hopefully we're going to hit just what you need to know. And then there's stuff out there you don't need to know. I mean, think about it. There's people that sell accidental death life insurance. Accidental death. Now, let's just say you're, I don't know, 80 years old, climb up on your roof, clean out the gutter, you fall off, you die. That's an accident. Do you need accidental life insurance? No, you just need life insurance. So, what I'm saying is that you could get life insurance and somebody else comes along, well, we'll sell you another policy of accidental life. So we're going to talk about that because you need the information. So you get just the insurance that you need, and it's an essential planning tool when it comes to your finances. Now, remember, the purpose is to transfer the risk from you to the insurance company. Now, if you don't have the proper insurance, you can go bankrupt. I mean, in America today, a lot of people go bankrupt because they don't have health insurance. And you can go to the hospital. I had one individual said that they had back surgery, and I don't know all the details because he never became a client of mine. And he owed the hospital $500,000. So it doesn't take long. Okay, so you want to have insurance so you don't go bankrupt. Then we'll talk a little bit about the various policies, but once again, it's to put an umbrella over your life, protect you from the elements, the disasters that could come your way. All right, so on the page 189, there are the 7 basic types of coverage. Some are more relevant now, and a few will be more relevant later on. Now, on page 190, the ways to save on your premium, that's the amount you pay the insurance company, is about the deductible. So if you get car insurance, uh, you could do a $250 deductible, $500, $1,000, and you're going to have to weigh out the numbers and you're going to have to see how it plays out because chances are you may need to use your car insurance. And let's just throw out a number here every 10 years. And let's say, you're going to have out of pocket of $1,000. Okay, so that's $100 a year. Okay, so when you go get your insurance, you say, okay, well, if I get a $500 deductible, it's $80 a year cheaper, and you keep running the numbers and you see what makes sense. And you could use as a ballpark figure the 10-year mark. So if you're going to save enough money to pay the deductible over a 10-year period, then go that route. If it doesn't pan out, then go ahead and lower your deductible. But if you can afford to pay the extra money, if you get into an accident or fender bender, and you can get into an accident and it could be um, your fault, and your insurance pays the other, but maybe on your car it's only $600 worth of damage. Well, if you have a $500 deductible, honestly, I wouldn't even turn it in. I'd pay all $600 because I don't want it on my whatever. I don't want to raise my rates as much as possible. So you got to figure those things out. And typically, you're probably going to at least get a $500 deductible. That's going to be in your emergency fund. And as you get older, you may go up to $1,000 deductible, and you're going to have several months worth in your emergency account, and it's going to keep your premiums down. So, all right, so you just need to calculate how things are going to go. Now, on page 191, the basic coverages on auto insurance. And, most insurance companies are going to say, well, here's what's normal. Okay. And for the most part, they know what they're doing and they're not trying to rip you off. And you can compare 2 or 3 companies and you can get a price with this deductible and this liability and all that. All right. So the liability, you're going to want probably at least $500,000, 500,000. It doesn't take that long for it to hit that. All right, with the cost of insurance and intensive care units and all that. So that's just a good route to take right now. You get $500,000 on your insurance. I will point this out. Hey, another thing that helps your insurance are good grades. If you're a B average student, your premiums will go down maybe 25%. So let's say it's $1,000 a year. That's $250. If it's $2,000 a year, that's $500. So keep that in mind. Be average, good grades. All right. So, all right. And then, of course, we're going to pay cash for the car, and you're going to have medical payment coverage and all that, collision insurance, and that's listed in your book on 192, and comprehensive. And that's your car if it's sitting in the driveway and a tree falls on it. All right. So, but you'll want that. And then, of course, you're going to have uninsured insurance. I mean, that's out there because I was in an accident way, way, way back. I'm like 20 years old, and I'm in this chain car reaction. And it was funny because at the time, all 5 of us, we were sitting at a light. All 5 of us got rear-ended. In other words, this guy came up, hit one, hit another, hit another. Time he hit me, I was the 4th car. I barely hit the 5th car. Didn't even hurt the front end of my car, but it did hurt the back end. And the guy that caused the accident had no insurance. State Farm had to foot the whole bill, but we all had uninsured motorist insurance. So you have to have that. All right. So you want to get a good deal on your insurance, and you can check 3 or 4. Maybe you want to check State Farm. And look, I don't know. There's several. Geico, Progressive, you've seen the ads and all that. So once again, when it comes time to get insurance, and I'll tell you, it doesn't hurt once a year to just go over your insurance and check around, because you might be surprised that you could save money by switching companies even a year or two later. And you could be with a company. I found this to be true. I've been with State Farm 40 years, and we just changed. My wife found a much better deal with Geico. So all I'm saying is just check and see how it goes. Because I checked a few years ago and it wasn't going to help, but now it's saving us several $100s a year. So I don't know. So keep that in mind when you go shopping for car insurance and get you a really good deal.